Welcome back, everyone. Now for our next CEO keynote interview on the plumbing that underpins the crypto market, we're pleased to welcome Rob Catalanello, co-CEO of B2C2. Joining him is Phil Stafford, editor of FT Trading Room. Over to you, Phil.
Thanks, Adam. As Adam said, welcome everybody. And as Adam says, I'm sat here with Rob Catalanello from B2C2. Rob, I'd like to get straight into it here. Everybody knows that when it comes to the crypto markets, one has the opportunity to trade directly on an exchange. Part of the whole rationale for crypto is that it bypasses a middleman, an intermediary. So maybe for the benefit of everybody here, just explain what a crypto broker does and why we would actually need one.
Sure, Philip, and thanks so much for inviting me to speak at the conference. I'm Rob Catalanello. I'm the co-CEO of B2C2. I am the oldest man in crypto, if you can't tell by my gray hair. And so what we do here at B2C2 is we're principal at risk liquidity providers. So when we think about the history of crypto, it really started out, as a very retail-based market with individuals trading directly on virtual exchanges all over the world. The exchanges had various fee structures, various amounts of liquidity, and depending upon the jurisdiction where the exchange was located, the tokens that were available for trading were quite different. As the market has changed over time, and there's more of an institutional need for or institutional interest in trading the asset class. A lot of the exchanges just don't live up to the sort of requirements of an institutional investor. There's lots of information leakage. The liquidity can be spotty at times, particularly during periods of market disruption, and the availability to access funds, to either get funds on an exchange or to remove funds from an exchange, that can be challenging, especially during times of market dislocation. So what we do is we're very happy to show our own price. We're not a broker. We're not an agency desk. We're not an exchange. We make principal prices to our clients. We don't charge a fee. We don't demand pre-funding. We trade everything principal to principal on a net open position basis with T+0 settlement. We offer 24/7 settlement. We offer 24/7 trading. And our technology was built specifically for crypto. So we are a truly crypto native firm, and we really excel in times of market duress, when sometimes the exchanges, have some issues.
So what you are is to some extent a reflection of the growing demand on the institutional side. Well, just to clarify here, when you talk about institutional, are we talking about more crypto institutional firms like maybe specialized crypto hedge funds, or are we talking about what you might call the traditional finance of this world, who might be interested in this market, but for obvious reasons, mainly regulatory, are a little bit nervous about getting involved?
Sure. So we actually have quite a large franchise, in excess of 500 active clients, with a couple, 100 or so more who are live but not trading actively, and about 75 in queue to be onboarded. And that account base really runs the gamut from your crypto native funds, retail platforms. All of the agency desks take my pricing. And increasingly, I'd say, especially over the past 9 to 12 months, we've seen a strong influx of traditional finance names that want to trade the product. global macro funds that everyone knows, smaller hedge funds, corporates, you name it. So we really do, span the entire universe, both of institutional and crypto native firms.
And then to clarify, when people want to trade, what is it that they're trading with you? Is it the spot? Is it a derivative? What exactly is it?
So we trade. We offer a variety of products. So obviously spot. We also trade for, and I want to specify that we do pay very close attention to jurisdictional restrictions. So we don't try to be all things to all people. We trade 25 or 26 tokens only, and 4 of those we don't trade in the United States because of concerns over whether or not it's a security. We also trade the CFD, or perpetual overnight swap, again, internationally, not with US persons. We trade over the counter options. We also have a very active funding business where we borrow and lend coins with our account base. And we're building out the ability we do NDFs, we'll do deliverable forwards. And we're actually building out the ability to start doing other products such as futures, tokenized debt, and tokenized equity, things like that.
Excellent sketch out here. But what you're discussing, what you seem to be describing here, to a listener, maybe say, well, okay, I hear an intermediary trading OTC. Trading not just spot but futures and options. There's securities lending. Oh, there's lending. There's swaps, NDFs. One could be forgiven for thinking that this might actually just be a simple replication of a traditional finance market in crypto. Is that a fair characterization?
In some ways, it is. We always, when I came on board in 2019, when I met the co-founders, I realized how great the technology was. Not just the technology as it pertained to pushing out prices and the like, but actually the way that the technology spoke to each other. The risk system worked with the accounting system, worked with the trading system. We have live updates. And when I say live, I mean live, a few millisecond delay maybe of what our balance sheet is, what our collateral position is on any exchanges, what we have in transit, risk by customer. I have live views of my customer risk, risk by coin, risk overall as a firm. So we quickly realized that if we took that technology and we combined it with the same sort of customer service that institutional clients were used to getting from TradFi banks, tier 1 banks, that we would make it very easy and seamless for clients to really to embrace the asset class. And in that way, we would be the platform for institutional adoption of crypto, not only spot trading, but also all the other products that we're building out.
And that ability to have a near real time view of your risk of the balance sheet. That's the distinct difference between that and say a traditional finance model. A self-described oldest man in crypto, you said you've spent a lot of time in sorry, Rob, a lot of
No,
time
no, it's fine.
in the traditional
It's fine.
in the traditional markets. Is that actually the crucial difference, sir?
Well, I think it's a difference. What I think that the big difference is, we get asked a lot. Oh, all these guys are coming into the market. We saw your rank #1 in the latest, PwC OTC study. What are you going to do when someone with a big balance sheet, throws it at crypto? We say, well, it's not the pricing that's so difficult. It's everything else that's difficult. It's being able to settle. Because remember, in traditional finance, FX settles T+2, except dollar Canada, which is T+1. Equities have a defined settlement, times, as do fixed income securities. In crypto, that doesn't happen. So, the ability to reconcile client positions real time and to settle really makes the difference. And I don't know of many firms anywhere that, and I'm not, we don't do, we don't refresh every 30 seconds, every minute. We're refreshing all of our systems and all of our risk calculations real
Mhm.
time. So that allows me to notice, like, oh well, we've got a lot of withdrawal requests coming in, we need to make sure that we have adequate funds. I'm in an over collateralized position on one exchange, I should remove funds there, bring it to somewhere else. And so it just it gives us the ability to operate in this very volatile market when no one else can. So, for example, last May 19th, after Elon went on Saturday Night Live and made those comments about Doge and Bitcoin, and things collapsed, markets were freezing up. But we actually did 723 individual settlements that day, and we restructured 19 loans. That's one settlement every 2 minutes, and we did it with a global team of 8 middle office staff. That's just how scalable the technology is. That's just how well we work together as a team, not only as a middle office team, but front and middle office working together. Now, since that time, we've expanded the size of the team. I think we've got closer to 13 or 14 people now, but still, this is something that a lot of people don't realize, is so important, and that's why we think our technology is tough to beat.
Is it is this part of the pitch here that effectively, we all know that, and we've seen many a time that when things get volatile in crypto, especially when the price drops rather than goes up, many of the retail exchanges have operational issues, and it's a remarkably consistent happening. And but and you say when this kind of thing happens, we're there in the market,
Yes, and that's important to institutional clients.
right?
They just can't wrap their heads around not being able to access their funds for a number of hours, or not be able to get a dealing price on an exchange, for minutes,
And that
seconds, minutes, or hours. So
and
we
this is what you were. Oh, my apologies. Yeah,
I'm sorry. No, yeah. So we under promise and we over deliver, but we feel, as it pertains to our over the counter clients, that it is paramount that we are always there with the tightest possible bid ask spread, and the ability to settle funds. On a normal day, we're settling 75% of all requests within 15 minutes of getting the request hitting our system and there being adequate funds to settle. 99% within a half an hour. That extra 1% is if there's some holdup on a wire, or people request non-US dollar fiat on the weekend and we can't move it. But that's really where we try to differentiate ourselves and really allow us to become the platform for institutional
can,
adoption, of the asset class.
can I just go back slightly to a point that you raised a couple of minutes ago? You talked about settling very, very quickly. Um, how is it? How do you actually risk manage some of these positions? I ask in relation specifically, because a lot of people will know, there's a proposal in front of the CFTC at the moment, from FTX, just about about a very different way of risk managing derivative positions from the way that the traditional market does. Uh, if we're talking about differences and similarities between crypto and traditional finance, is there a difference in the way that you actively risk manage swaps and other derivative positions?
Well, we're not currently trading swaps, because we're not
Right.
we are in the process of applying for swap dealer certification, and all that.
Mm.
But what we do in general is, we run a delta neutral book. So
Right.
we have all, it's all proprietary technology. It starts out with, our predictive mid. So we have models that, come up with a predictive mid for all of our coins that we trade. Then each of those coins has a minimum bid ask, charge. And then, we don't tier our clients. We actually have the ability to send bespoke prices to our clients in every coin, in every pair, and in every size. So I'm currently pushing out around 34 or 35,000 individual prices a second. So my data set is great, by the way. And we have the ability probably to execute up to 6,000 trades per second. So what happens is, when clients trade with us, we're taking all that information into account, and that kind of moves our predictive mid, and that helps us clear risk. So we're actually clearing anywhere from 60 to 85% of all of our OTC flow internally within 120 seconds. Right. And then once we get to the 120-second mark, if the risk is under certain internal risk management controls that we have, we'll let the models run a little longer to clear that risk. We built, we have access to the other part of our business is we make we trade proprietarily on exchanges for alpha. So we're currently trading on 24 exchanges. So if we need to help clear risk, move some of the exhaust, we can do it through the exchange. And we built a smart order router back in 2014 that we've been, improving ever since. And that allows us to, with a single button, clear any risk we have on all 24 exchanges. And it gives us really very tight pricing if we need it.
So what you're describing up to now is a world in which, I mean, clearly you can see that there's another world growing alongside the traditional retail market on exchanges, and it's happening off exchange. Do you have any sense of how big the two markets are relatively? What you might see as the visible the retail market, and how big the OTC market is.
That's a tough question. Yeah, that's a tough question. I think because, well, remember we don't trade a lot of coins. There are 2,000 odd tokens out there that people are trading. We trade 25, and we do so for a couple reasons. Number one, we want to make sure that we can trace all these coins from a regulatory perspective, so that they have to be available on Chainalysis or something, or Elliptic, so that we can actually track the coins and make sure that we're not getting anything that's come from scams or God knows what. Number two, there has to be a big enough float in the market so that I can borrow. And why do I need to borrow? I need to borrow to satisfy a short position. Bearing in mind that we don't take directional bets on crypto, that's not our business model. Our business model is, principal liquidity provision in price making that attracts customer flow, so I can capture bid-ask spread. But I may need to satisfy a short because I am trading on an exchange, or I need to make delivery to a client. So if we can't borrow, we don't want to touch it. Number three, we have to believe in the blockchain. We don't want to get involved in blockchains that can get hacked too easily. Number four, we have to make sure that we, think that there's enough customer demand in the token, because we do trade quite a bit. So that really limits the amount of coins that we trade. I can tell you that, our volumes, when I started here in February of 2019, we were probably doing less than 5% of our volume OTC, and 95% was our exchange trading business. Now it's getting relatively close to 50-50, and the amount our overall volume has increased multiples of what it was when I started. So I still think clearly and we don't face we don't face retail clients. We only face institutional clients.
Sure.
I still think the retail market is bigger than institutional, but it's catching up.
Yeah.
The institutional adoption, and I don't know if you saw the news this morning, but with Fidelity, allowing people in
Yeah.
the U.S. to keep Bitcoin in their 401ks, we think that's going to add more to the institutional demand. So. And there's a
Sure.
lot of double and triple counting, like,
Yeah.
and agency brokers sometimes will double count, you know, so you have to be
Um,
very, very, very cautious when listening to those numbers.
I'm conscious that we've got just under 10 minutes to go. So I just a quick reminder to the audience that if you want to send through any questions to Rob, then please for Rob to answer them, please do so. You've got just under 10 minutes to do it. In the meantime, there's one related to what you were talking about there, Rob. One thing that particularly caught my eye about BTC2 in recent months was that you decided to join ISDA, the
Yes.
Derivatives Trade Association. Um,
Yes.
Tell me the thinking behind that and why that is important to you.
So as we engage with a more institutional client base, you know, we start trading more sophisticated products, NDS options, swaps when they come. A lot of traditional hedge funds, they want an ISDA because it's what they know. The
Right.
problem was that there really was no ISDA that addressed digital assets. So we would take an ISDA form and we'd craft an agreement, based on that. So we felt it very important to join ISDA, not only as a partial member, but as a full member, because we felt as though the product set is going there, it's becoming more institutional, and we wanted to lend our expertise to this great organization, as it pertained to the next generation ISDA that would
Hmm.
contain references to digital assets. And I'm happy to say that we've agreed in principle to work with ISDA on
Hmm.
helping to come up with the definitions, for digital assets in the next version of the ISDA. And my colleague Nicola White, who we hired about 9 months ago to be president of B2C2 USA. She was previously at Citadel. Will be attending the ISDA conference in Madrid, speaking on a panel along those lines. So
Hmm.
we just think, that the market's going that way. Institutions are accustomed to it. We've got great expertise, and we think we can be very helpful in the process.
I mean, it's clearly at the moment working their way through doing a very specific is the for crypto assets, which I believe is very is getting a lot of interest over at ISDA. It's very difficult to actually find enough space in the working groups for it, which gives you an indication of
Yeah.
how popular it is. Um, if and when that comes, do you expect that to be a kind of the one of the key barriers to mainstream institutional adoption that is removed?
I Well, I think it will remove it. Yeah, absolutely. Because remember,
Right.
you know, crypto moves, right? And it's not uncommon, for us to make intraday margin calls, or to do 3, 4, 5, 6 settlements with our clients in the same day. Uh, you know, with as positions move. With the traditional ISDA, you have typically, a daily, you've got a daily a reset, a minimum transfer amount of whatever, so 10 o'clock or 9 o'clock in the morning. Okay, the mark is 100,000. You have 100,000. Send you that money until 5 o'clock. Hey, but with the 24-hour cure in crypto, like a that's a long right to make a call at 10 o'clock in the morning and then not to get the funds for 30 or 32 hours. There's gonna be some learning on both sides, I think. But I think that
Hmm.
once we get that framework down, it'll be much, much, much easier to agree on docs. Because right now, when we're onboarding traditional finance, the documentation process takes a long time because we're just going back and forth.
Are there a question coming from the audience, which is one that I'm interested in myself. But are there any other key barriers to mainstream institutional adoption other than regulation?
Well, yeah, I think wallet technology and security, that really, that's a big barrier because people don't really understand it. And there's the whole concept of commingled funds versus private keys. So, we will only trade with clients who own the keys to their wallet because my KYC extends to my client's wallet. There are people who are currently trading, with exchange and allow their clients to have exchange wallet or commingled funds. That probably won't last very long once regulation starts, just for things like the travel rule. We like to know that we have certainty of who I'm getting money from and who I'm sending money to. And if I keep all the deposits and withdrawals available for my clients to see, then we're pretty close to satisfying the Mnuchin rule, the travel rule. So I would say wallet technology is a big issue, custody, and the provision of credit, because in this market there's historically been no provision of credit. So the whole prime brokerage space does not exist, in our market. And balance sheet's expensive, as everyone knows. And right now, with the predominant, trading in crypto being spot, it's hard to say that, it's more of a custody relationship than a prime broker relationship. So that's kind of got to build as well.
The another question which I hope we've got enough time for, because it's a fascinating one. I mean, how do you see the market structures, infrastructures evolving? I mean, are there technical challenges in trading with exchanges?
It's most of them are cloud based, right? So historically, there hasn't been that race to zero on who can get the best servers closest to the exchange and be able. Now, having said that, it's changing. Um, and we do anticipate that low latency connectivity is going to become more important. Over both the near and longer term. Right now, the connectivity issues are all kind of based on, cloud technology. So in as much as there's enough bandwidth, there shouldn't be an issue. But if and when it gets so congested and there's so much demand, for that bandwidth, we may start to see some issues.
So, but then how do you see the market infrastructures evolving?
I think that, I think that we're starting to see really more of a demand for products other than spot, right? And a way for institutions to access this market, in a regulatory compliant way. So it's really the growth, I think, of the product offering, and then that will spur innovation in prime brokerage, and everything else that's going to make this look more institutional. I'd say in the next 3 to 5 years.
Do you think by the end of that to come circle again, that actually you end up with an institutional market that is far greater than the retail market, far greater in size?
I don't, just because, and I know we only have a minute left, so I'll be quick. I don't, because I think that crypto has other societal benefits. Think about it. Right now, more than half the world's population doesn't have access to banks, but they could potentially have access to a wallet and central bank digital currencies or some sort of sanctioned stable coin. So I think that as the market grows, the ability to bring some sort of banking infrastructure to a vastly underserved population will kind of keep things tilted toward the retail side. And that's my sermon.
And so, and I probably would ask another one, but I think we're probably out of time here. So as Rob said, that there was we had only a couple of seconds left. So I think I'll
Well,
draw it to a
I'm
close
happy. I'm
here.
happy to come. I'm happy to come back in the future if you'd like, Philip. So, and thank you for
I
the
hope so,
opportunity.
and I hope I've really enjoyed talking to you. Thank you very much, Rob. I hope all the audience listening in have enjoyed it as well, and please stick around. With that, I will now hand you back to Adam in the studio. Thank you very much for listening.
Thank you.
Thanks, Phil, for that excellent interview. It's really interesting to hear how crypto market infrastructure is evolving over time. For our viewers, be sure to join Phil again tomorrow for his panel on DeFi. Coming up after the break, M&A and venture capital. How much deal making we're going to see in 2022. See you shortly.